The median age of a first-time homebuyer in America just hit 40 years old. That is the highest ever. About 20 years ago, it was closer to 29. That one number tells you a lot about how difficult buying a home has become. But the housing story looks very different depending on where you live, because some states built their recent housing boom around one huge wave of people moving in. Then that wave slowed down. And that is where things started to change. In some states, prices are falling. In others, homes are simply sitting on the market much longer. In this video, we are looking at 10 states where the housing boom is cooling fast, what is actually happening in each one, and whether this is a real collapse or simply a much-needed correction. Let's get into it. At number 10 is Idaho. A few years ago, it felt like everyone was moving to Idaho. Boise was pulling in Californians, remote workers, and retirees with cash, and home prices jumped more than 26% in a single year in 2021. If you already owned a home there, great. If you were trying to buy one, the market suddenly got a lot harder. But that kind of growth was never going to last forever. By early 2026, home price growth around Boise had slowed to almost nothing. Homes that once sold in a matter of days were now sitting on the market for weeks, sometimes even longer. That was especially noticeable in places like Canyon County, west of Boise, where a lot of new housing went up during the pandemic boom. What makes Idaho interesting, though, is that the economy itself did not fall apart. Micron is still investing billions around Boise, and Meta is building a major data center there. The jobs are still real. The problem is that home prices ran too far ahead of what the market could actually support. To tell you the truth, Idaho simply got too expensive too quickly. The huge wave of buyers slowed down, but all the homes built for that wave were still there, so the market had to cool off. And that is really the bigger lesson here. A place can have a strong economy and still have an overpriced housing market. Those two things are not the same. And Idaho is finding that out the hard way. At number 9 is Utah. A few years ago, Utah looked like one of the best places to move in the West. It had a young population, a growing tech scene around Salt Lake City, and real mountains just a short drive away. For a while, that combination worked really well. Then home prices took off. Along the Wasatch front, prices jumped roughly 50% in just 2 pandemic years. Since then, the market has cooled, but not always in an obvious way. Instead of cutting prices, a lot of sellers are simply taking their homes off the market and waiting. That matters because it can make the market look more stable than it really is. If someone pulls a listing instead of lowering the price, that does not show up as a price drop. It just disappears from the data. At the same time, property taxes in parts of Salt Lake County have risen sharply since 2020, right on top of already high home prices. And younger Utah residents are finding it harder to buy their first home. That is where the real pressure is. Not with big investors. Not with people flipping houses. It is regular young families who used to have a realistic shot at buying a home and now feel priced out. The bigger problem is that Utah has had a housing supply issue for years. The Wasatch Front is squeezed between the mountains and the Great Salt Lake, so there is only so much room to keep spreading outward. On top of that, a lot of development has focused on single-family homes instead of denser housing. Utah has introduced some programs to help first-time buyers, but those programs can only do so much when the main problem is that there simply are not enough homes at prices younger buyers can afford. At number 8 is Colorado. Colorado's housing problem is a little different from the others on this list. Insurance has become a much bigger part of the problem. A lot changed after the 2021 Marshall Fire in Boulder County. That fire destroyed more than 1,000 homes, and what made it especially shocking was where it happened. This was not some remote mountain community surrounded by forest. The fire tore through suburban neighborhoods and shopping areas, and strong winds helped it spread incredibly fast. After that, insurance companies started looking at Colorado differently. Areas that once seemed relatively safe were suddenly being treated as higher risk. Some major insurers stopped writing new policies in parts of the state, and homeowners in mountain and wildfire-prone areas started seeing much higher premiums. For buyers, this creates a problem right at the finish line. You can find a house you love, qualify for the mortgage, sign the contract, and then discover that getting affordable insurance is much harder than expected. And without insurance, the lender may not approve the loan. That means some buyers are spending the final weeks before closing calling one insurance company after another, only to be rejected or quoted a premium that pushes the monthly payment way above what they plan to spend. A seller can lower the price. A buyer can negotiate. But if nobody is willing to insure the property at a reasonable cost, the entire deal can fall apart. Other western states have faced similar wildfire problems, but Colorado has been slower to build protections around the insurance market. And that is the reality some buyers are learning right now. A beautiful mountain home can look perfect until you find out how difficult and expensive it is to insure. Number 7 is Montana. A few years ago, Montana looked like one of the hottest places in America to move. Bozeman had the mountains, the open space, the small-town feel, and a huge amount of attention from out-of-state buyers. Popular TV shows added even more interest, and buyers from places like California were showing up with cash and sometimes offering well above the asking price. That pushed Bozeman home prices to level that were hard to justify for a city of its size. But the market has cooled a lot since then. Bozeman's median home price has fallen roughly 20% from its 2023 peak. Homes that once sold in a weekend can now sit for months, and the number of out-of-state buyers has dropped sharply from the boom years. There is another problem too. A lot of Montana homeowners locked in very low mortgage rates a few years ago, so they have little reason to sell and take on a much more expensive loan today. That keeps inventory tight, even while buyer demand is weaker. And this is where Montana looks different from Idaho. Idaho still has major companies investing around Boise, including large technology and semiconductor projects. Montana never built the same kind of economic base. Its housing boom depended much more heavily on tourism, lifestyle, scenery, and the huge wave of people wanting to move to Big Sky country. Once that wave slowed down, there was not another major industry ready to support those high home prices. So Montana's problem is pretty simple. The lifestyle is still beautiful, but the housing market was priced for a level of demand that is no longer there. At number 6 is North Carolina. North Carolina has a different problem. Here, insurance and extreme weather are becoming a major challenge. Hurricane Helene changed the conversation in western North Carolina. When the storm hit in 2024, it caused major damage in mountain communities like Asheville and Boone. These were places many people had viewed as safer alternatives to the hurricane-prone coast. But Helene showed that being far inland does not necessarily mean being safe from major storm damage. And the coast has its own insurance problems. Some insurers have reduced coverage in coastal counties, while homeowners across the state have faced higher premiums. That means buyers can find a house they like, negotiate the price, and then discover that insurance makes the monthly payment much more expensive than expected. At the same time, homes are taking longer to sell and inventory has been rising. So North Carolina is still attracting people, but buyers are starting to look much more carefully at the full cost of owning a home there. The mortgage is only part of it now. You also have to ask what the insurance will cost and how exposed the property is to storms. At number 5 is Nevada. Nevada's housing boom was built around one city more than anything else, and that is Las Vegas. For a few years, everything seemed to be working at the same time. Tourism was strong. Californians were moving in looking for lower taxes and larger homes, and buyers were pushing Las Vegas real estate higher and higher. Then things cooled. Home sales dropped, inventory increased, price cuts became more common, and homes started taking much longer to sell. You can see it in some of the newer neighborhoods around Henderson and North Las Vegas. A few years ago, builders had waiting lists. Now some are offering mortgage rate buydowns, upgrades, and other incentives just to move homes. Nevada also depends heavily on tourism and hospitality. That makes Las Vegas more sensitive when people cut back on travel, conventions, gambling, or entertainment spending. And that is where Nevada looks different from Arizona. Phoenix has also gone through a housing correction, but Arizona has major semiconductor investment helping support its economy. Las Vegas does not have the same kind of economic anchor. Tourism is still extremely important, and tourism can change quickly. So Nevada is not only dealing with too many expensive homes. It is also dealing with an economy that depends heavily on people continuing to show up and spend money. At number 4 is Tennessee. Nashville was one of the biggest winners of the early 2020s. People loved the combination of no state income tax, lower housing costs than many coastal cities, music and entertainment, and a growing economy. For a while, buyers were moving so fast that some were skipping inspections just to win bidding wars. That market is gone. Homes that once sold in a week can now sit for 2 or 3 months in some areas. Inventory has grown, and parts of the Nashville market have started seeing actual price declines. The basic problem is that prices went up as if the migration boom would continue forever. It didn't. Once fewer people were moving in at the same pace, sellers were left asking prices that buyers were no longer willing to pay. Tennessee still has major advantages. There is no state income tax on wages. Nashville still has a real economy, and people are still moving there. But the housing market got ahead of itself. And now it is working through the difference between what sellers want and what buyers are actually willing to pay. At number 3 is Texas. Texas is probably the most complicated state on this list because there really is no single Texas housing market. Austin, Dallas, Houston, and San Antonio are all behaving differently. Austin is where the biggest correction has happened. Home prices there are well below their 2022 peak, and price cuts have become much more common. Homes are also taking much longer to sell than they did during the boom. But Austin is not collapsing. People are still buying homes. Pending sales have been improving, and foreclosures are nowhere near what we saw during the 2008 housing crisis. The real problem is that Austin prices simply went too far. During the pandemic boom, buyers pushed prices far beyond what local incomes could comfortably support. Now the market is coming back down to something more realistic. Elsewhere in Texas, the picture is mixed. Dallas has softened. Houston has held up better. San Antonio is dealing with a combination of more housing supply and higher insurance costs. And that brings up something people sometimes forget about Texas. Yes, there is no state individual income tax. But homeowners still have property taxes, insurance, utility costs, and other expenses. So the Texas value proposition is still strong, but it is not as simple as saying, move here and everything is cheaper. At number 2 is Arizona. Arizona became one of the biggest migration destinations in America after the pandemic. People came for the sunshine, cheaper housing compared with California, and the huge amount of investment happening around Phoenix. The semiconductor industry was a major part of that story. But builders also put up a lot of homes because everyone expected that wave of new residents to keep coming. Then migration slowed, and all those homes were still there. Phoenix inventory has climbed, homes are sitting longer, and prices have weakened in parts of the market. Tucson has also seen significant declines. Extreme heat has become part of the equation too. People have always known Arizona is hot. But when that heat starts affecting electricity bills, insurance costs, water concerns, and everyday living expenses, it becomes more than just something people joke about. Still, Arizona has one major advantage over Nevada. The jobs are real. The semiconductor investment around Phoenix is real. So the long-term economic case for Arizona has not disappeared. The housing market simply built too much, too quickly, based on the idea that migration would stay at pandemic levels forever. It didn't. Now Arizona is working through the extra supply. At number 1 is Florida. Florida has probably received more housing crash headlines than any other state recently. And there are real reasons for that. The biggest one is insurance. Florida remains one of the most expensive places in America to insure a home, especially in coastal areas. In places Monroe County, annual premiums can reach extremely high levels before you have even paid the mortgage, property taxes, or HOA fees. Then you have places like Cape Coral and North Port, where home prices have fallen sharply. Those markets had a combination of hurricane damage, heavy new construction, and buyers who simply looked at the insurance costs and decided the numbers did not work. Condos are another problem. New inspection and reserve requirements have forced some South Florida condo buildings to finally deal with years of delayed maintenance. For some owners, that has meant huge special assessments on top of already expensive monthly HOA fees. Florida's state-backed Citizens Insurance Program has been shrinking as more private insurers return to the market, and rates have started falling in many counties. That does not suddenly make Florida cheap. Insurance is still extremely expensive. But at the same time, parts of the insurance market are finally starting to stabilize. So what connects all of these states? When you look at all the states together, the pattern is pretty simple. Post-pandemic, people were moving in huge numbers. Mortgage rates were extremely low, remote work gave people more freedom, and buyers were looking for more space, cheaper homes, warmer weather, or a completely different lifestyle. Home prices took off. The problem is that, in many of these places, prices went up much faster than local incomes. That could only continue for so long. Now buyers are doing the math again. They are looking at the home price, but they are also looking at insurance, taxes, wages, utilities, and how much house they are actually getting for their money. And that is why these markets are cooling. Some will probably recover faster than others. Idaho and Arizona have major technology investments supporting their economies. Montana and Nevada depend much more heavily on tourism and lifestyle demand. Colorado and North Carolina are dealing with insurance and climate risk. Texas is correcting after years of massive construction. And Florida is dealing with a mix of insurance costs, condos, hurricanes, and too much housing in certain markets. But the bigger story is the same. People are no longer willing to pay almost any price just because a place is popular. They are checking the numbers first. And right now, that is forcing a lot of housing markets to come back down to reality.